Hey traders, Lance here. In today's video, I want to talk to you about pre-market and post-market trading because I feel like today's perfect for this issue with Apple gapping lower as they warned about their next quarter earnings with the coronavirus having an impact. So we can see here, this is Apple 5-minute chart, TD Ameritrade Thinkorswim. We closed last Friday around 325 and 4 a.m. Eastern time. We actually printed down to 310. So that's about a $15 move lower. And then Apple actually rallied pre-market. And then here we are trading during the normal trading hours, and the stock's down about $9. So a few things I want to go over. If you are trading pre-market and post-market, make sure the stock has liquidity. Volume is there because the bid and the ask can be very wide during these hours. If you want to check the bid and the ask, you could go to your active trader tab. You could go to time and sales and see, hey, where are the buyers? Where are the sellers? Where are they getting filled at too? If you're into level 2, you could look at level 2 as well. Just make sure if you are trading these names that they have good volume for you to trade. That's number one, the most important thing. Make sure there's volume. And again, your stocks like Apple, Facebook, Microsoft, Intel, SPY, QQQ, IWM, all those names will have pretty good volume. And just to show you an example, here's a pre-market 5-minute candle here at 7:50 a.m. Eastern. Apple traded 17,500 shares. And then the last 5-minute candle here, it's traded nearly 250,000 shares. See how volume really moves, or volume is very more active. The stock trades a lot more volume during the normal trading hours than pre-market. So again, be careful. The next thing, why are stocks moving pre and post-market? Usually it's because of news, earnings, upgrade or downgrade in the stock. That's why stocks are volatile, and that's why they're moving. So make sure you recognize if it's maybe a biotech, maybe they had an FDA approval, make sure you recognize why the stock is moving pre and post-market. And one more example while I'm here is look how volatile names can be. Again, this is Apple. Apple went here 5 minutes before the open from 317.25 down to nearly 315.25. That's a $2 move and 5 minutes lower. Like, it just happened a flash. A lot of these times there are machines just running orders, running stops, and then Apple opened and it moved up literally $3 on the first 5-minute candle. So that's wild. I do have a few rules for pre-market and post-market trading. And that's if the stock does not have news, I won't even pull up the pre-market or the post-market price action on my charts. I just feel like they don't add any value if stock doesn't have news. Oftentimes you'll see weird prints, and it's not necessarily it's usually the platform just having weird prints on the chart. So I don't want to be involved in that. Next thing, if I'm looking to day trade, I don't want to look at pre-market or post-market. It's just, again, that liquidity is not there. It's just not for me. If I say to myself, wow, Apple, the reaction to this coronavirus, it's overdone, and I want to buy some Apple for a swing trade or a long-term trade, then I feel like pre-market, post-market trading is fine. Then the last thing, if you are trading options, maybe it's an earnings or maybe, again, it's news, and let's say you have Apple puts and then it gaps lower. Like today on this news, you can always hedge your long puts that you bought with buying stock. Just in case Apple goes lower, your puts, if Apple starts moving higher, you buy stock, your puts are going to go down in value because the stock's going up, but you'll make money on your common stock long. And the same with earnings or news. If a stock gaps higher pre-market and you have long calls, so you're holding call options, you can always short stock to lock in your gains on those long calls.